how do I manage my tax rep practice? How do I get transcripts? How do I track what is going on with the IRS with every single one of my client cases? How do we complete the offer forms, the powers of attorney, everything? We use Tax Help software. Tax Help software is the cornerstone of our practice. We use it for its intelligent ordering. Every single night, it will update the transcripts on our clients, so we will see things happen long before those letters even go to the mail. We can then, react. We can let the client know. We can get all the transcripts we need to determine what our client's best options are, when is the debt going to expire, and we can fill in all of the IRS forms and get them filed accurately, the analysis done correctly. If you're interested in giving it a test, go to taxhelpsoftware.com, use promo code TAXREPTRIAL, all one word, all caps. You'll get a free 2-week trial. Again, that's taxhelpsoftware.com, TAXREPTRIAL, all caps, for a free 2-week trial. If you love it and want to buy it, use TAXREP10, capital, all caps, TAXREP10, TAXREP10, all caps, one word. You'll save 10% on your purchase. It will be the engine that runs your tax rep practice, just like it's what we use for ours.
Hey everyone, thank you for joining us for this week's Tax Rep Network podcast. I'm Eric Green. Joining me is Kareem Carter. If you don't know Kareem is the Acting Executive Director for Global Operations for IRS Criminal Investigation. And what we're going to be talking about today is voluntary disclosure. But if you're not familiar with Kareem leads IRS-CI's international and domestic operations by overseeing policy, oversight, and support to the field offices and program areas to include tax and money laundering, special investigative techniques, seizure, forfeiture, narcotics, and national security. Prior to his role where he is now, Mr. Carter served as the Deputy Director for Global Operations. Mr. Carter has also served as a special agent in charge for the IRS-CI Oakland field office. Interesting. Mr. Carter oversaw a staff of approximately 80 employees in Northern California who investigated crimes involving tax, money laundering, public corruption, cyber identity theft, narcotics, and terrorist financing. He began with the CI as a student trainee in 2001 in the Denver field office, was promoted to special agent in 2002, and has been a whole bunch of places, Dallas, Texas, and everywhere else. Kareem, thank you for taking the time to do this and joining us.
Thank you, Eric, for having me, and I'm glad to be on and excited to talk about some voluntary disclosure.
Yeah, well, it's a program, it's a terrific program, but one that I think a lot of accountants in particular, and attorneys and taxpayers certainly, don't really understand. And so what I'm hearing, and what prompted this is about a month ago, somebody had contacted me and said, can you talk about the new voluntary disclosure? And just for the record, Kareem, if you can, voluntary disclosure isn't new. The IRS has had a pretty robust process, a little more informal earlier on, but you've had this process for a long time.
Yeah, Eric, this process has been around since the 1950s, well before my time. I think you said in my bio, I started in 2001. So since the 1950s, it's been through many iterations of the program, especially a special voluntary disclosure, offshore voluntary disclosure program. And since 2018, Eric, IRS combined the offshore voluntary disclosure program with the domestic voluntary disclosure program as it's known today.
Right. I mean, years ago, when I first did a voluntary disclosure, I called one of our local CI agents who was good enough to warn me, Eric, listen, we're happy to hear what your client has to say. Make sure that they're coming clean, right? Because, yeah, this is not a time, and this is what I tell clients, when you're going to do a voluntary disclosure, this isn't a time to start playing games, right? You've already played games. We're going to, for lack of a better metaphor, we're taking it all off and we're coming clean, showing everything, because this is your opportunity to clean this up. Since then, like you pointed out, it has become more, not more centralized, but it's become more formalized, right? There is a process to this. But for those folks out there listening, who are the folks that should come in and do voluntary disclosure versus the people, Kareem, that you really don't want in the program?
Yeah, Eric, I want to get to that question, but I think it's good for your audience to understand IRS and the difference between civil and criminal. So with criminal investigation, which I've been a part of since 2001, we are the investigative arm of the IRS, right? Our goal is to foster confidence in the U.S. tax system and compliance with the law. We investigate potential criminal violations of the U.S. tax law, which differs, Eric, from the civil side, who conducts our audits, examinations, and performs collection activity. Much different than criminal. So, audits, they determine whether you have calculated your taxable liability correctly. Criminal cases, on the other hand, we're trying to gather information from willful people or willful taxpayers that avoided taxes to put them in jail. So you ask what U.S. taxpayers should be really interested in participating in the voluntary disclosure program. Well, we're talking about those taxpayers that are trying to willfully avoid paying their tax. We're not talking about the ones that have made an honest miscalculation on their tax returns and realize that. That's not what this program is for. This program is for those who have willfully avoided the tax. And that's what we're looking to. Those are the people that we're looking to come into compliance.
Right. Now, and so what's interesting is I was one of those practitioners who, when we would get a non-filer, I would just file for pre-clearance on voluntary. Why? We got our foot in the door, right? Now we've come in first, even if I didn't really know what I was dealing with yet. Then that memo came out. I believe it was November of 17, around there. I think I may have the year off. Was it 18?
It's probably 18.
It was 18, right? Where they basically said, look, you're going to fix this whole negotiation that Eric Green used to do with, no, we only want to do 3 years, not 6. 6 years, you're agreeing to a 75% civil fraud penalty on the largest year. It's just part of the deal. That kind of, and where I'm going with this, that set the tone for, okay, really you want to do this if you think you have criminal exposure. Right. That's who it's really designed for. The non-filer who comes in and says, look, I haven't filed since 17. I had this happen, that happened, whatever. If there's nothing else there other than just the failure to file, those folks are really not the people that come into voluntary disclosure. They really should just get those returns filed as soon as possible and get into compliance. But the people that at least we're looking for now to bring into voluntary disclosure are people that, frankly, no offense, that deal to amend up to 6 years of returns, pay the 75% civil fraud penalty, that's actually a good deal for them because they're looking at potentially being prosecuted for what they've done. And so for the audience, I think it's important to understand just because someone's a non-filer doesn't mean you run into do voluntary disclosure. Now we're talking, by the way, IRS. Right. At the last few minutes, I'll mention to the audience, the states are different. All right. And I'll throw out a couple thoughts on the states. But so for IRS, Kareem, the people that come in, these are folks who really think they have criminal exposure. Could have been false returns that have been filed, things that were omitted, foreign bank accounts. You mentioned the offshore program. So what I'm curious, honestly, let's say that Eric Green, God forbid, but Eric Green had to do a voluntary disclosure. I don't, but let's say I did. I submit this. Well, actually, you know what? Before we even get to what you guys do, how do you even come in, right? We have a new form, reasonably new form 14457, which is the request for voluntary disclosure. There's part 1 and part 2, right? Part 1 is pre-clearance, and part 2 is, I'll call, for lack of a better term, the actual disclosure. Can you tell us what some of the thinking is behind that?
So I'll tell you about part one. Like if you decide, okay, hey, I want to come into compliance, I may have some exposure here. So what do? You look at part one, and you're looking at, they're going to ask you general questions like, what does this involve? Is it employment? What type of tax? Is it employment tax? Is it excise tax? Does it involve domestic, or does it involve offshore entities? You want to know stuff like that. Your biographical data. Do you have a power of attorney? We talked about earlier those forms being changed. We put in there, one of the changes is that you can actually put in your power of attorney, so that your power of attorney can represent you immediately on that. So do you have a power of attorney? And really, one of the most significant questions on that part one is, have you had any discussions or disclosures to or from the IRS? Because that's a key point, Eric. If you've had, if the IRS knows about your potential disclosure, you don't qualify for the program anymore. And I think, did I lose you?
Nope, I'm here. Well, and that's critical, because you have to get in before the IRS, before the government knows about you. In fact, I was one of the folks at the ABA who helped write up the comments that were submitted. I actually don't like part one, and I'll tell you. And by the way, I understand why it's there, but what I didn't like about it, I'll give you an example. I had a client. The client is here in the U.S. They have accounts at UBS because they're not originally from the U.S. So what had happened is they had set those accounts up when they were back in the old country. Now they come here, they're never turned over because the bank doesn't realize they're in the U.S. So they want to come forward on the part one. It's list the non, I forget the term you use, but basically the accounts that weren't disclosed.
Right.
And my big axe to grind was, why do I have to tell you that? I mean, that's it, right? Then it's not really. I like the old pre-clearance of name, date of birth, social, and address. Because to me, I was arguing, why is it that you need this up front? You just need to confirm that we're not under investigation before I go voluntarily turning over information. And Dan Price, when he was with the IRS, was head of the program, was arguing with me saying, we need to know about these accounts because we don't want to bring you in if you don't qualify. And he and I went back and forth, and ultimately it's still there in part one, and no one listened. Anyway, but part one is sort of, like you said, the bare of, so the IRS knows sort of who you are and kind of the broad brush of what
right.
Which, by the way, is a bit of a turnoff to some of the taxpayers. But usually what we've told them is, look, we're going to be disclosing no matter what. So there's little risk, I think, in generally coming forward. You've never been contacted. But I will tell you, it is unsettling for many of them, and I have had people not do it. They've looked at it and refused to do it.
Eric, I think that's a great point. I mean, if you're trying to come into compliance, and even if it's not on part one, eventually you're going to get to that question. Has this income, or what is that account? Where is this income being reported? It's going to happen. So I think that's a great point.
Right. Now, what I'm curious about is, so we submit part one. Can you kind of give us what happens internally at the IRS? So part one is now generally it's faxed. I fax it in. What happened? I mean, to the extent you can tell us, what happens internally at the government to that part one disclosure?
So yeah, you mentioned one of the changes that happened in February of 2022 to make this process more streamlined is that we did include an option to e-fax this part one over to the IRS instead of mail, and that streamlines the process. So what happens is, we kind of talked about this earlier, we're looking to make sure there's been no interactions with IRS. Does criminal investigation have a criminal case against this person or against this taxpayer that they're not aware of? Have there been administrative summonses issued on this matter? Has it been reported to the media? We're looking for checks like that to basically a pre-clearance to make sure that we can pre-clear this person to get to part 2.
Right. And so what happens is you go through, you determine Eric Green, thankfully, is not under investigation already. There's been no contact. And then for the audience, what will happen is a letter will come back from CI saying that we're effectively cleared to now submit part 2. And I think it's 45 days. They ask for part 2 to be submitted.
Correct. Now with that 45 days, Eric, there is an opportunity to submit an extension request with that 45 days. Now that's on a case-by-case basis, and it's only a one-time extension if granted.
Right. But for the audience, so the client comes in, you submit part 1. Hopefully, let's say it's somebody, and somebody comes in and says, "Look, I have not been reporting this whole other business line. My returns are false. I can't sleep at night anymore." You submit part 1. What I would be, at least what I'm doing, is I'm having, and we're a law firm, we don't do returns. I'd be having my forensic accountants or whomever is helping that taxpayer, hurry up. I want these returns done. We don't submit them with part 2, which we'll get to in a moment. But I have to be able to explain sort of roughly what the tax implications are, right? They do ask on part 2 for the ranges, but also, are we missing documents? Do we have to go find things? So you should be working on this. Hopefully part 1 is accepted. You get cleared to come in and do part 2. We now submit part 2. For the audience, CI does not want you sending the returns and all the backup and all of that. You're actually told to not submit that, just submit the part 2. And then eventually, Kareem, we will have an auditor contact us. It'll get assigned to a civil agent to come and effectively, now we'll submit all of our returns or backup or whatever.
Yes, that's correct, Eric, and that's great for your listeners. Do not submit those tax returns to criminal investigation, because you'll go through the pre-clearance process, as you mentioned. Hopefully you're pre-cleared, and then that information is assigned to an examiner from our civil side. So remember the difference between criminal and civil. They'll start looking at that. And at that point, really, IRS criminal investigation is removed from the process, unless, and you kind of hinted at this, if the taxpayer refuses to cooperate, right? That's why it's important to, you said, have that forensic accountant to start getting all those documents that are associated with that, because the examiner is going to ask you for those documents. And if you're not forthcoming and you're not cooperative, then you're not going to be accepted into the program. And then at this time, criminal investigation may or may not get involved with the voluntary disclosure again.
Yeah, no. And again, for the audience who may have never been through this, so here's what happened. And here's, by the way, here's a moment where you really do need to do voluntary disclosure. Mm-hmm. And I'll give you an example. Client has been paying everybody in cash. So when they come in and said, "Look, I got to clean this up," we don't have ID numbers. We can't do W-2s or 1099s. We're not even sure how much he paid. It was one of these, by the seat of his pants kind of an operation. And there are many more of those, unfortunately, than you'd think. So, in other words, we can't just file returns and assume they'll go through and get them into compliance. So voluntary disclosure, I think, is great for that, because we can explain this. And by the way, and again, for the audience, we have been dealing with, for some reason, all of my voluntary disclosures go to one person. She's out of Vermont. Because I'm in Connecticut, I guess I'm in her territory. She has been great to work with. They are aware of the problem. They know we don't have the records. So what we've been able to do is say, look, here's what the industry usually does. Here's roughly what we paid. By the way, we have fixed it going forward. And that's a critical thing. Mm-hmm. We had a client that didn't. He kept right on paying everyone cash. And we were like, what are you doing?
What's the point of doing a voluntary disclosure if it's not going to fix the problem in the future, right?
So my law partner, Lisa, was like, do you want to go to jail? Because we don't understand what you do. Anyway, but you can, I think my point is the auditors that are dealing with these cases, in my experience, are aware that the clients coming in are a bit of a mess, are aware that we don't have everything. So the normal procedure with most of the auditors, if it doesn't tick or tie, they sort of off the record become kind of jerks about this, and they're going to deny this and deny that. That has not been the experience. Now, again, I don't know if they're given specialized training or what, but they have been, she in particular has been very good to work with. They're not pushovers.
Mhm.
I mean, we can't get, we had them reject expenses, whatnot, but they are at least are aware of the fact. And this is why you can do this in voluntary disclosure, and whereas you can't just file returns with guesstimates. Voluntary disclosure allows you to take that client who really is lacking in records and piece together what you can and work with an agent to get it resolved, which is really critical. Even where the client did know better, it's not really criminal. Yeah, but this looks bad, right? It's cash, no records. I think just eat the 75% on the 1 year, and let's just, because we can clean it up easily, well, not easily, but clean it up better through voluntary than not. But you did also raise another point. The client has to understand that they are agreeing to cooperate. In the offshore, I have to tell you, I had a case that's, and I'm sure you've run into this. You've done your, and this is big with offshore, you've done your review. My client has come through, they paid their whatever, but you realize they worked with a banker, and that banker was under investigation, was a target of DOJ and IRS. So they would contact us and say, we'd like to come out. We have agents in Chicago. They're dealing with a grand jury. They want to come out and interview your client. And I had a client say, I'm not doing that, refuse. And I'm like, whoa, wait a minute. You agreed to cooperate. And so, Kareem, can you, I mean, to the extent you can comment on that, that cooperation goes beyond just getting the stuff filed and calling it a day, right? If in what they were doing is tied to something bigger, that cooperation has to continue.
Yeah, I mean, there's a possibility we're going to ask you for records that's related to that other situation. So that's a part of the voluntary disclosure process, and that's what we're agreeing to. I mean, ultimately, Eric, the goal. It was great to hear that you said that the examiners, are willing to work with the taxpayers on this, because the ultimate goal is to create compliance amongst the U.S. taxpayers, right? And that's what we want. I mean, it's so refreshing to hear about the examiners, but there are times where the taxpayers sign up for this and they don't want to give over documents. Well, then now you're violating a part of the voluntary disclosure, and then you have people like myself from criminal investigation that's coming to knock on the door, and now you're opening yourself up for criminal investigation. And I'm sure
you made it worse. You would have been better off not doing the voluntary. By doing the voluntary disclosure, you've given, like I tell clients, you're giving them the roadmap to what you've done.
Right.
This is not a good time now to stop cooperating. So if you're not going to cooperate, and I've had clients back out. We've drafted part one, we've walked them through this, and we always explain, we're going to cooperate. And these people you were paying cash to, right, they're gone. You now have your employees, they are on payroll, you're doing this correctly. No, I can't compete if I do that. Well, you can't come forward without fixing it. Well, then I'm not going to come forward. All right.
Well, I'm curious, is your response then you run the risk of
we've
being criminally liable and potentially going to prison for it?
Oh, yeah. No, I mean, there are certain industries where paying people cash off the books is just rife. And we walk them through it. We explain the downside, and they're just not going to do it. Okay. Then we've had some come in, we do part one, and then when we go to do part two, realize they're still doing the same behavior. And so we need to get that, hurry up and fix that. So the big thing, I think the takeaways for the audience is obviously, understand, who should use voluntary disclosure, understand part one, part two, but you also have to deal with the client. The client needs to clean this up. going forward. They need to cooperate as part of this. Even if they can't full pay and all that, you need to cooperate with the collection aspect. You'll pay what you can pay. You get into a payment plan. You know, the idea right now is the client needs to understand, I think this would be my takeaway, that this is their opportunity to sleep better at night and clean up this mess that they created. But this has to be a change going forward. If they're going to continue doing the same thing, this is not going to work, and it's not going to end well for them.
Yeah, great points, and it's the moral compass of it, right? You kind of made the decision to partially tap your foot in the water and test it out. Go through with the full thing. Are you still there?
I am.
Okay, I'm having some difficulties over here, but one of the things that I liked, there's the quote. Have you been to 1111 Constitution, the headquarters building of IRS? Well, on the Constitution side, there's a scribe on the building, and it says, taxes are what we pay for a civilized society, right? It's all about compliance. So if you come into compliance, we talk about the moral compass, you get an opportunity to rectify some wrongs, pay your fair share, because that's what we all want, is that everybody's paying their fair share of taxes, because we know what the tax money goes to support: bridges, roads, education, you name it. So this is their fair opportunity to come into compliance here with IRS.
Yep.
And pay their fair share.
I agree. And so from your sense, before we wrap up, I mean, what do you think the takeaways, what would you like the audience to know about voluntary disclosure?
Well, I want to say, we've talked about this. I want to give you a couple of stats. The change in the form 14457, recent change that happened in February of 22. So just a couple of months ago. So we're now accepting photocopies, faxes, and scans of taxpayer signatures. That wasn't the case in previous years, as you're probably aware of. All of this helps for streamlining. Taxpayers can now send their documents via e-fax, which we mentioned before, as opposed to via mail, which expedites the process. We've expanded the form to include a box for virtual currency. We talked about the power of attorney option there. And I just want to give you some stats on how those changes have impacted the program. So for cycle time, let's just talk about cycle time for part ones. For fiscal year 2022, all of fiscal year, the cycle time for part ones is 96 days. Now, if you look at that and we start looking at the cycle time from April 1st, 2022, so this is when the new procedures are in place, that cycle time has been cut down to 40 days. Okay. Cycle time, if you take it a step further, July 1st of 2022, the cycle time has been cut down to 18 days. So we're seeing that these new procedures in place have streamlined the process. We talk about the cycle time for processing part twos for all of fiscal year 22, the cycle time is about 17 days. So since April 1st, 2022, that cycle time has been reduced, Eric, to 14 days. And from July 1st, 2022, it's down to 12 days. So we're all about compliance here. It's all about compliance, fostering compliance in the U.S. tax system.
Can I tell you something? You know how long it was back in 18? Over a year. We had a panel at the ABA, me, Frank Agostino, you probably know Frank, and Jana Ziering. We were on a panel and we were all griping that it had been over a year. We hadn't heard back about part one. I just did one where when you said 96 days, I was like, I almost wanted to cut you off. Say, I think it was like a few weeks and 18 days. It was under a month. And part two went through also fairly quickly. It has made a big difference. I mean, as a professional, these are now, whereas I would tell people, we have a year to work on these returns and whatever else, because we're never going to hear. Now it's you guys are moving right along.
We're turning around, right? And that's great to hear. And I'm glad that the changes that were made to the forms have expedited the process and streamlined it even more. So, but again, I mean, you said, some final points as we wrap up, but we talked about this. The program offers a second chance at compliance, right? It's all about compliance. It keeps special agents like myself from knocking at your door. It's good to understand the program and how to qualify. I think we talked about that. One of the things though I wanted to mention is that a key qualifier for the program is the source of income. Now, in the U.S., legal source and illegal source income are all reportable. However, with the voluntary disclosure program, illegal source income does not qualify for the voluntary disclosure program. And for your listeners, just for illegal source income, we're talking income derived illegally, drug money, embezzlement, embezzled funds like that will not qualify for the voluntary disclosure program, but they are required to be reported on the U.S. tax return.
So if you're involved in an illegal business, voluntary disclosure will not help you.
It will not work for you. So, and then lastly, I mean, we talked about the scribe, right? It's about compliance, and just remember that taxes are what we pay for a civilized society. So
I agree. Listen, Kareem, thank you very much. What I will do for the listeners in the links below in the description, I'll put a link out to, first of all, the page that you have on voluntary disclosure on the IRS website. If you've never been there, listeners, it's actually very good. It walks you through this. There are links to the forms. So I will put that in the description below. If you have a client or just want more information, go check that out. It'll link over to the form 14457. So you can go through that part 1 and part 2. Also, by the way, have a lot of very detailed instructions. It's about 13 or 14 pages, and there's only about 5 that you fill in. The rest are all the instructions. So there's a lot of information out there for the professionals to look at, or taxpayers even that are looking at this. And I said to everyone, final thought, understand that the states do not necessarily mirror the IRS. So for instance, IRS generally compliance is 6 years. The voluntary disclosure program, you have to correct the inaccurate or improper returns limited to 6 years. So that's all kind of consistent. The states are all over the place. And I'll give you an example. Massachusetts, if you're a non-resident, 3 years. Resident, 7 years. Connecticut and New York are 3 to 6 years, depending on the length of non-compliance. New Jersey is 4 years. California is all the way back to the dawn of man. So, you have to look at the individual state where your taxpayer is. Look at that individual state's voluntary disclosure program and understand it may not mirror. In fact, it probably will not mirror the IRS. So you're going to have to keep that in mind when you're doing this. But otherwise, everyone, listen, thank you for listening. Kareem, thank you for coming on and doing this. It's great. And hopefully everyone knows more about voluntary disclosure.
Well, thanks, Eric. Anytime. I'd love to be a guest on your show again.
All right. Thank you. And I thank Carissa for helping set all this up. And everyone else listening, we will catch up with you again next week. Bye-bye.